Hello students, hope you will like and understand the content of this video. If you have got any query, please send it through the comment box. If you like Smart Lectures, please subscribe, follow, like, comment and share our channel. Thank you very much.
Financial Statements, Episode 7. This is the trial balance as on 31st December 2017. Opening stock 1000, purchases 2000, sales returns 100, coal, gas, power 200, bad debts 700, debtors 4000, land 1000, copyrights 2000, total 11000. Credit balances: capital 2000, sales 4000, purchases returns 300, provision for bad debts 1000, long-term loans 2000, creditors 700, profit and loss account 1000, total 11000. And at the footnotes, closing stock 300, bad debts 1100, provision for bad debts 200, provision for discount on debtors 300. And we have to prepare trading account, profit and loss account and balance sheet. You know, financial statements have two parts, income statement and balance sheet. And income statement has two parts, trading account and profit and loss account. Anyhow, let's start the question. First of all, I strongly recommend you should start the question with adjustments. You know the format of trading account, profit and loss account and balance sheet. The trading account, to opening stock, to purchases minus returns, and on credit side by sales minus returns by closing stock, and in profit and loss account on credit side by gross profit, and in the balance sheet liability side capital plus net profit minus drawings, and on asset side closing stock. So first of all, closing stock is 300. You know, all adjustments hit twice, one on debit side and one on credit side. So it means this closing stock, if it is taken to the financial statements, it will go to the debit side as well as credit side. So first of all, it will go to the credit side of trading account and then debit side of balance sheet. Debit side of balance sheet means asset side of balance sheet. And now the adjustments are for bad debts and provisions. I have already suggested that if you find any bad debts or provision for bad debts in trial balance or in adjustments, I strongly recommend you should immediately write down the whole format in balance sheet on asset side and profit and loss account debit side. And first of all, you should complete balance sheet. So let's move to the balance sheet. That is debtors minus new bad debts minus new provision for bad debts minus new provision for discount on debtors. So debtors are 4000 minus new bad debts. New bad debts means the bad debts taken from the adjustments, that is 1100, and the balance is 2900, then minus new provision for doubtful debts. New provision for doubtful debts means the provision taken from the adjustments, and they are 200. So 2900 minus 200 and the balance is 2700. Then new provision for discount on debtors, and that is 300. New provision for discount on debtors means taken from the adjustments. I have already explained you bad debts and provisions for doubtful debts or provision for discount on debtors If they are taken from the adjustments, they will be called new ones. If they are taken from the trial balance, they will be called old ones. So in this way, 2700 minus 300, 2400 in the outer column. Now let's complete profit and loss count. What will be the format? The format is to old bad debts plus new bad debts plus new provision for bad debts plus new provision for discount on debtors and minus old provision for bad debts. So old bad debts are 700. Old bad debts means bad debts taken from the debit balances of trial balance, that is 700, plus new bad debts, we know it is 1100, plus new provision for bad debts, that is 200, plus new provision for discount on debtors 300, and the total is 2300 minus old provision for bad debts 1000, and the balance will be 1300 in the outer column. Again, be informed, you cannot change the order in this format. Means you cannot write down debtors minus new provision for bad debts and then you deduct minus new bad debts. It means you are disturbing the order. If you try to disturb the order of this format, your question will go wrong. So in this way, new bad debts, old bad debts, new provision, new discount on debtors are gone. Now let's move to the trial balance. We have to take each and every item. You know the golden rules of the financial statements. Whenever the financial statements are made from the trial balance, number 1, don't miss the item. Number 2, don't repeat the item. Number 3, debit item will go to the debit side and credit item of trial balance will go to the credit side. So number 1, opening stock 1000, take it to the debit side of trading account. Now we are taking all the debit items first. Purchases 2000, it will go to the debit side of the trading account in the inner column. Sales returns, this is the debit item, but we will take it to the credit side of trading account. That's why it will be deducted in the inner column. 100, then coal, gas, power. These are the direct expenses will be taken to the debit side of trading account. Bad debts, we have already taken. Debtors, we have already taken. Land 1000. This is the long term asset, it will go to the asset side of balance sheet. Then copyright, this is an intangible asset, it will go to the asset side of balance sheet. So we have taken up all the debit items. Let's move to the credit items. Capital 2000 in the inner column of balance sheet. Sales, it will go to the inner column of trading account credit side. So net sales will be 3900 in the outer column, and purchases returns 300, it will go to the credit side of trading account. No, instead of taking to the credit side, it will be taken to the debit side of trading account and it will be deducted in the inner column. So 2000 minus 300 will be 1700. Then provision for bad debts, we have already taken up. These are the old provision for bad debts because they are in the trial balance. Then long term loans, long term liabilities are taken to the credit side of balance sheet, means liability side. Then creditors, this is a short term liability, it will go to the credit of balance sheet, means liability. Then profit and loss account 1000, it will be taken to the balance sheet liability side. You know, profit and loss count, if it is available in the credit balances of trial balance, it means during the previous years the company or the firm made a profit of 1000 but it was not transferred to the capital account. So you can say it is accumulated profit 1000. All accumulated profits go to the liability side of the balance sheet. In this way, we have taken up each and every item of the trial balance. Let's complete trading account. Total on both sides 4200 and to gross profit 1300. This gross profit will move to profit and loss account credit side. So by gross profit 1300. And the total on both sides 1300. So net profit 0. It is nil. So this nil profit will be taken to the balance sheet liability side. It will be added in the inner column of the balance sheet on liability side. So capital 2000 plus net profit 0, minus drawings 0, and in the outer column 2000, and the total on both sides is 5700. It means the question is perfectly okay. Again, let me remind you, whenever you find old bad debts or new bad debts, old provision or new provision, I mean to say, if you find any bad debts or provisions in the trial balance or adjustments, I strongly recommend you should write down the whole format. It will become quite easy for you.